Hello, everyone. Welcome back to the trading room. I'm Shane Vernier, and this is the 5813 Trading Strategy Workshop. We're going to go ahead and we're going to go over this scalping strategy, show you a few ways to trade it, and also just hit some of the high points of sort of a lot of these strategies have been in high demand. I mean, I get a lot of messages asking about crossover strategies and triple moving average crossovers and the 920 EMA crossover and all those different things. And we like to cover those, especially on a day when you can make some money today. There are some moves. We're seeing a little bit of price action here, really, for the NASDAQ up about 1.4%. So there is some action in there. But this week, isn't necessarily the greatest time to be trading. I do believe that we're going to hit the ground full guns on Monday. I think we're going to be in for some big-time market moves. There's a lot going on in the world. We talked a little bit about some sort of depressing things yesterday. But we have to really realize what's happening to the macroeconomic environment. There's a lot going on. There's a lot of terror stuff. Today we saw another huge story coming out of Washington, D.C., and this was Joe Biden blocked Nippon Steel's proposed acquisition of U.S. Steel. That's a huge deal because U.S. Steel, at one time, U.S. Steel was one of the biggest outfits in the world, and you can see that now we're really starting to see the government get directly involved in commerce. And what does that do to the markets? Well, it brings more uncertainty to the markets. So you're definitely going to want to keep a close eye on the news feed. I think that what we're looking at now is definitely going to be some of the biggest, I would say, uncertainty that we've seen in a long, long time. And that's pretty much for the next 3 weeks until we see the inauguration on the 20th. We're seeing some really brutal reports about, supposed terror threats. There's a lot going on right now. So be careful if you're in the markets. Remember, hey, listen, we stepped up yesterday and we said, gold, we want to be long gold. You saw gold sell off today. It was a good point by Mark Corp. He said gold looks tempting. I said, yeah, we're going to look at gold too. So we've got U.S. oil really rallying. Take a look at the oil market up around 74 and a quarter. We are rallying here. Gold is down. Oil's up. What's the NASDAQ doing? The NASDAQ sort of, I would say, trading sideways. We're going to go through and sort of reverse engineer this trade. This was one that I executed earlier on demo, and it turned out to be very good. But we're going to use some RSI confirmation here and sort of walk you through how to do this 5813 strategy and maybe see if we can find a trade. I'm watching the dollar yen closely. I'm also watching natural gas. I think natural gas, we may have an opportunity to buy this thing back using this 5813 on a 30-minute chart. This chart right here is a 1 minute, so we're going to be looking at doing some scalping here. That's for sure and certain. All right, guys, let me see. We got some comments in here. Ivy, good to see you, Ivy. Always a pleasure. Bobby Bob, Mark Corp, good to see you guys. Welcome back. Let's see. Hi, Coach. So far, Bobby Bob, using the 920 crossover, and I can say it's 95% working for me. Well, it's like with anything. If you can dial in your risk versus reward and understand what the strategy is trying to accomplish, then you have a great chance to succeed. Full disclosure, I'm not really too big on crossover strategies, but I do view the crossovers, my 13 EMA and my Bollinger Band midpoint crossovers, I see that as being a big deal. So I'm always watching crossovers. I don't necessarily trade them religiously, but the 920 is a pretty strong strategy. And if you're trading it at the right time, on the right time frame, that's really the trick. The trick's being able to know when to trade it and what to trade it on. Okay, guys, let's go ahead and get into this. We're going to cover a little bit of the news as well, but I want to get started with this triple moving average crossover. Here's the video online. We got it at our How to Trade YouTube channel. It's triple moving average crossover. We use 5813 EMA examples. I get the question all the time. They say, Shane, you always use the trading simulator. You always use the replay function to demonstrate the trades. And I go, yeah, I do. And the reason why is it's just for time. We can trade these things live, but the problem you run into with that is you got to put a heck of a lot of time to find a good setup, to execute the trade, and then to record it all and then edit it. It really is a heck of a lot easier just showing you the dynamics and really how the trades work on that replay functionality. So if you haven't missed this video, be sure to check this one out. We've got a few strategy videos that have been pretty popular up here. This 920 EMA video, go ahead and check that one out if you're looking for a crossover strategy. That's a pretty good one. So for today, this is a good look at the 920 EMA and what the schematic would look like. Now, we're not, we're using the 3 moving averages today, but realistically, the concept is the same, especially when we're talking about using RSI as confirmation. Now, the relative strength index is something that I don't really trade in isolation. I've always got to have something else to help me trade when I'm using RSI. I don't believe that you can just see a market that's overbought and step up and sell it and be okay over the long run. What happens inevitably is you get caught up in trends, and that's why most momentum oscillator traders use it as a confirming tool, not necessarily as a trading signal provider. Okay. In any case, this is the basic concept. This is the 920, but we're going to add another moving average. But when our RSI is overbought, we're going to wait for that 5 to cross the 8 and price to be beneath all 3 moving averages, and that's going to be basically it. That's basically it. So, and once again, if you missed the 9 EMA, I know this was a very popular video. A lot of folks like that one. Check that one out as well. And the idea is the concept is going to be, are we in overbought territory before we get into the market? Yep. Overbought, we sell. Oversold, we buy. It really is that simple. Okay, let's get out to a real-world example that we executed not too long ago. And this is a trade that came across the board, let's see, about an hour ago, somewhere in there. And I executed it on demo. It would have been great if it could have happened during our live stream, but it just seems to me like what we do with really every day is trying to time the market out. This would have been your sell. Now, you can see that it's pretty easy when we point these things out. In real time, was it a challenge? Not really. And the reason why it wasn't a challenge is because you could see that this market was in overbought territory. So as soon as that RSI gets up over 70, I'm looking to sell the market. I want the crossover to develop. So when we trade a 5-8-13, what is the crossover we're looking for? We're looking for the short-term EMA, the 5, to cross over the 8. Now, that's going to be our entry point. Now, I get this question a lot too. Okay, Shane, well, if the 5 crosses over the 8, why don't you just trade a 5-8 crossover and forget about the 13? Because you can't forget about the 13. The 13 is your longer-term EMA. It's your anchor point. And what I mean by that is it's the moving average that really gives us a good idea of what market state's really doing. Now, our qualifier, before we can get into the market, we've got to have the 5 cross the 8, okay? We've got to be in overbought territory, which we were on the RSI. So we were looking to sell right there. What else has to happen, though? You have to get price on a sell. It has to be completely beneath all 3 moving averages. If it's not, you can't sell it. So this was an interesting trade. The crossover actually developed right here. You could have sold it down in here, probably. You could have sold it at market, maybe down on this break. You could have done that. The sell was somewhere right down in here, though. So you took immediate pain. But here's the deal. Now, when you're going to trade these things, when you're going to trade a moving average crossover on a 1-minute chart, okay, understand that it doesn't get any more intense than that on an E-mini NASDAQ futures. It's a fast market. There's a lot of action all the time. Now, our stop loss is going to be where? I'm a big believer in going right above that previous swing high or beneath that previous swing low. That's going to give you an opportunity to let this trade work. Now, a lot of folks don't do that. A lot of people say, okay, I'm taking the sell, and when this thing crosses back over, when the 5 crosses back over the 8, then I'm getting out. And that's great. That's just fine. But on a 1-minute chart, you've got to give these things a chance to work. You've got to give them a chance to work because you get in here, you get the real tight compression, then the break, and then you're short. And, of course, inevitably, the price rotates back up against you. That's going to happen. It's all about where your stop loss is. That's the key to success with something like a crossover strategy. So this particular one, I had it up above that swing high. It was a significant risk. Remember, dial in your leverage, 1 to 3% on any given trade. Don't wager any more than that. But you're looking at something like this. Nice rotation back against us, and then we finally got our plunge. And it actually turned out to be a pretty darn good trade. So the question is what are we doing right now on this NASDAQ? And the reason why I pulled up this E-mini NASDAQ futures is because it's an active market. There's a ton of volatility in this thing, and it's a fast-moving market. And on a 1-minute chart, it's not hard to get an overbought or oversold territory. But right now, we're just sort of flatlining. So we don't have a trade to speak of right now developing on this NQ future strategy. So definitely watching that one. Let me see Michael watching from Nairobi, Kenya. Good to see you, Michael. Welcome. Gibson. Hi, Shane. Good to see you. Good to see you too, Gibson. Always a pleasure to rally up and see everybody in the room. This week hasn't been the best with the holidays. You had New Year's, and then you had sort of a strange situation here in the United States, and then yesterday's trade wasn't really that great. Today, we're seeing some action, but it's not necessarily that great. I'm more than happy sitting on my hands until probably next Tuesday. But we're going to be back Monday. Be sure to check out the upcoming stream schedule. I haven't penciled it in for next week because I'm not really sure how we're going to approach it, but I'm pretty sure we're going to be going at this time every day, and we'll probably do a few of those 10-minute live tick scalping sessions. A lot of you really enjoyed those, so we're going to be doing that as well. All right, Euro USD 30-minute chart. Now, I'm a big fan of the 30-minute chart. It's one of my favorites. It is my go-to chart when I'm trading futures during the U.S. session. Now, as far as Forex goes, is it a great chart? No, not really. I mean, I like a 4-hour chart because it gives us a much bigger sample size, a much bigger ranges on our bars. And for the Forex, what happens, especially with something like the Euro USD, is when that market slows down, nothing really happens. And so you get into a situation where you just get chop. You get a lot of chop because there's no real moves. But this was interesting. This goes back to January 2nd. This was yesterday. 30-minute chart, Euro USD. What do we got? We're in oversold territory. Price crashed beneath that 30 on the RSI. That means we're looking to buy. Well, when are we going to buy? We're going to buy when our red moving average, our 5, crosses over the 8. The 8 is going to be in the middle. That's going to be your blue. But that's also not good enough. You've got to wait until price gets above that 13 to buy it. That's why the 13, that's why that longer-term EMA is important. It gives you a good idea of what the market's doing. We want to see the market commit. It's not enough for us just to get the 5 to cross the 8. We put the 13 in there to qualify the trade. So what do you have? There's going to be your entry right there. And I know we're reverse engineering trades, and most folks want to do this stuff live, and that's great. But these are pretty good examples of trades that have gone very well. This one right here was a nice bid. You could have bid right there on that close, and really it was a tremendous rally. You got a little bit of action here on today's ISM numbers, but realistically, it was a fantastic rally and really a pretty good position. So all in all, what could we be looking to do right now with the Euro USD? Not much. Not much. And the reason why is, well, we're not in overbought or oversold territory. And when you start playing that RSI as confirmation, above 70 is a sell, beneath 30 is a buy, and you go to longer time frames, like a 30-minute, like a 4-hour, you could be waiting for a long time. You could be waiting for a long time for a trade to set up. That was a pretty good one yesterday. You made money on that trade. But right now, we're just sort of flatlining right around the middle of our RSI zone. We're not going to get much action here at all. So we got to wait. And remember, they pay us to wait. They don't pay us to trade. Let's see what else we can do here. U.S. dollar, Japanese yen. This is an interesting one right here. This is a 4-hour chart, and I was really watching it. I wanted to see if, in fact, we could get into that oversold territory, and it was an almost but a not quite. It was an almost but a not quite, and that was a few days back. But then you sort of rotate through everything, and where are we at? We're flatlining. Dollar, yen, not much there. We could take it right down. I highly advise against doing this, though. When you see the market flatten out and you go to a shorter time frame looking for a trade idea, more than likely you're gonna get hit. So right here, if you want to go to a 30-minute, I would probably condone that. I think anything lower than a 30-minute right now on this Forex session is probably a mistake, but that's just my own opinion. You guys, if you're making money, hey, listen, if it makes money, it's the right answer. So if you're making money, keep making money. But this right here, this nice big sell-off, we want to see the market commit one way or the other, and it is just absolutely flatlined. There's no trade here. There's no trade here. The reason why? Because the market's flat, and our RSI tells us that. Now, there is one trade that I'm watching relatively closely, and I think we're going to get. Here's natural gas. Now, natural gas has been on a tremendous sell-off. We had a huge fireworks in the natural gas market earlier this week where we saw a 16% rally in a day, which is absolutely staggering. It's absolutely huge. But for right this minute, we are in a severe downtrend. We pulled back almost 8%, 7.59%. I don't know what's going on in natural gas, but I will tell you this. That is some incredible volatility. So out of volatility is opportunity. So we can get in here and we can make some money, but the market has to come to us. So with this 5-8-13, I'm watching a 30-minute chart, which is a pretty good chart to use during the U.S. session for natural gas. You typically see some decent moves, but something like this, you've sort of just been oversold, repeatedly oversold. We're looking to buy. In order to buy, we've got to get our 5 to cross back over our 8, and we have to get price established above that. So rolling into Monday's session, it depends on where natty gas opens. If it opens up a little bit, there's a chance that we could get that crossover immediately and then have an opportunity maybe to bid this thing coming out of the gate for Monday. So I'm watching that relatively closely. I'm not a huge gas trader. Natural gas has been one of the tougher markets to master. A lot of people have absolutely dumped fortunes trying to master the natural gas market. The biggest one that comes to my mind was optionsellers.com out of Florida. And they were basically, what they were doing is they were selling option contracts. They were writing the options, collecting the premium, and just betting the market wasn't going to move. And when it moved, they blew out $300 or $400 million of their clients' funds, and it happened like in a week. So you got to be really careful with natural gas. I'm not a big fan, but I do like this opportunity. Why? It's wintertime, number one. We have a chance to bid, and we also have the conditions to bid. So I would be watching this relatively closely on Monday's open. I think if we do get a break up above, if our 5 cracks our 8, and then we get a settle maybe up above that 13, then we're going to look to take it long. More than likely, you're going to get a pretty good trade out of this. Why? Wintertime seasonality. I like the long side of this market. I think we trade up to 4.25, somewhere around that 2020 gap. I've talked a lot about that on X. I've actually covered that on the live streams as well. So I'm watching this to the top side. I think it's going to be pretty good. We just got to wait for the situation to come our way. I think it will. So let's wait and see what happens. Okay, so that's a good look really at your 5/8/13. Now, if we were going to look to, if I was sitting here right now and saying, okay, we need to find a trade for the 5/8/13, I'm going to go right over to my tote board and I'm going to say, okay, what's on the move? Because remember, we're qualifying everything through an RSI. So if I was looking at equities right now, I'd say, okay, the Dow's up a little bit. The S&P 500 is up 1%. We were looking at that US 100. We just looked at that one as well. How about the US 500? Let's go ahead and pull a chart here. 30-minute chart. What do we have? Okay, we've got conditions. We've got a target-rich environment. What does that mean? It means that we're in overbought territory. So we're looking to sell this market, but we've got to get our crossover situation first. Now, as you can see, this U.S. session has been incredibly bullish. It really has been. Right there's your opening bell. That's pre-open. Right there's your opening bell. Ding, ding. A lot of chop, but we're definitely grinding higher. So as we roll into next week's trade, I would be watching this 30-minute chart saying, okay, we're in overbought territory. I want to sell the market. We've got to get our crossover. Our 5 has to cross our 8, and price has to be established beneath the 13 EMA. It's that simple. 30-minute chart, is that the best one to trade? Right now, I would say, yeah. If I was going to be trading U.S. equities, I always lean on the 30-minute chart a lot. But if we wanted to take it down to, say, a 5-minute chart, what could we say now? Okay, we were in oversold territory back here right after the U.S. Open. Look at this. There was a crossover. Technically, there was a crossover. Price is beneath it. You probably lost that trade. You got a nice initial move right there. You got a nice bearish move, but the market crossed back over. My stop loss probably would have been right here, so that would have been taking a loss on that 5-minute trade. As far as the rest of the day, do you still want to sell? Well, I mean, we were almost in overbought territory right there, which would have set us up for a sell, but it hasn't happened yet, and quite frankly, the market's just drying up on us. Very bullish, though. I mean, I would still be to the long side. This thing would have to be just perfect for me to look to scalp this to the short on a 5-minute chart. What would that mean? It means the RSI has got to go above 70, and then we've got to get the big pullback and have an opportunity to sell maybe into the late session. Got about 2 hours, 45 minutes of trading left. I think you could probably get that late day sell. I don't know that anybody's going home long equities, especially in this environment with the terror attacks and a lot of the angst. The government stepping in, killing big steel deals. That was a $14.3 billion deal that the Biden administration just stepped up and said, no, you can't do it. That's a lot of money. You don't really see deals like that getting killed very rarely. There's too much money involved. So would I think that I'm bullish going into the close today? No, I'd be looking to grab a short. I think that's probably the best way to do it. Let me see, Labuka Ali. Hello, please. Can I set copy trading on your account? No. Nothing personal. No, I don't. I'm not a signal provider. I don't do copy trading. I answer questions and do my best to present some ideas on these live streams and maybe give you some of my analytics. If you're interested in trade ideas, come by the trading room. Check out our market analytics thread, and you'll get an actionable trade idea each day that we're watching closely. Yesterday was a US 30 pullback bid. We didn't get our pullback. We didn't get our level, but we may get it Monday. So something to think about there, Labuka. If you're interested in trading ideas, but I don't copy trade and I don't do signals, at least not yet. I mean, what would you charge to have somebody copy trade? I don't know. I don't know much about that industry. No clue. All right, guys, let's do some analytics here. That's sort of more right up my alley. Right here, you can see we've got the U.S. Oil Daily. We really wanted that pullback down to about 72 yesterday. I thought that if we got that pullback in a bid to 72.03, that we could knock it out of the park, and we just didn't quite get it. So right now, we are bullish, bullish, bullish. And the real question is how do you trade something that's absolutely breaking out to the top side? Well, the first thing that I would say is if you're looking at WTI crude oil, $75 is going to be huge. Mark it on your chart. That's a big deal. This is a bearish time of year. This is a bearish time of year for WTI crude, and we are seeing extensive pop to the top side. A lot of it has to do with the terrorism here in the United States. 100%. I have no question about that. Number two, we saw that Assad from Syria had defected to Russia, but he was poisoned today in a hotel room. I don't have any comment at all on it, but I will tell you that there's a lot going on. It's a lot of cloak and dagger stuff. I don't know where all this goes, but I'll tell you this: to see crude oil catching bids like this right around New Year's Day, this is amazing. We're at $75 crude in January, wintertime seasonality in the Northern Hemisphere. This should be bearish. So we're showing draws on supply, and we're also showing consistent bidding. It's anybody's guess where crude oil goes this next year. Most people are bearish, me included. I think that you're going to see a downtick in WTI as the oil comes back online to the market. We talked about this yesterday, but for right now, the bottom line is this: oil's catching bids, and that's all there is to it. So for me, I mean, relatively simply, I would go to my 30-minute chart here. I love the U.S. session 30-minute chart. That's pretty much my bread and butter. Really pretty solid volumes before we got that big kickoff. And right there is typically going to be your U.S. session kickoff right around 9 a.m. Eastern right in here. So right about 30 minutes before the Wall Street open is when you see a flood, typically a flood of volume hit WTI crude, and that's the old NYMEX. That's the old NYMEX trading hours, pit hours. Believe it or not, they still abide by those even on the electronic screen. So if I was trading right now, I'd say, okay, well, there's no reason to be a hero. I'd be put my bid right, probably 2 ticks right above there, and that would be my buy. Why would it be a buy? Because that's number one. This is where all of my volumes come into the market today. We're a lot of volume, about 9 a.m. Eastern, all the way to the present. We've got a lot of action there. 38% retracement of that range is a pretty good area for me. I would definitely be looking at that 73, 96, 95-ish, and we'll see if we get it. If we get an opportunity to scalp this thing. It's always tougher scalping a U.S. oil CFD contract, and the reason why is there's spreads involved. Now, if you're in the futures market, you don't have to deal with this spread. I mean, you can see the spread right there, 12, all the way down to the ask is at 05. That really hurts. That's a big-time spread. So we're looking to bid. We're looking to bid somewhere right down in here, right around 96, somewhere in that area. That's a pretty good trade. Now, if I was trading this, with my real account or real money, I would be looking at WTI futures, which are right here. Now, you'll notice the prices are very similar, but you'll also notice there's no spread. You pay a flat commission when you trade futures, and that to me is a big deal. So right there, that New York, sort of that beginning of our frenzy of trading, that low right there to this high up at 74.35. I'd be looking to bid right there, 73.97. So you could definitely be doing something like this: buy, limit, 73.97-ish. All right, we'll go 73.98. Go ahead, put it down, and that would be the trade. So if, in fact, we do get elected here, and it looks like it's coming our way, we might get a shot right now to get this trade. And these are demo dollars. Once again, I'm just trading one contract at WTI, which is not a very big position. Typically, you like to trade 2s, 3s, and 4s, but a one will get you involved where you need to get involved. So right there, I would be looking to take this trade. What am I looking for exactly? Well, I mean, to me, I always like it if I get the money straight away. So if we get elected right here at 98-ish and this thing bounces up to 04 or 03 or 04, I'm more than happy just taking $50 from this trade, especially if I don't have to take any pain. Now, where's my stop loss going to be? That's going to be a little bit harder because I'm not going to be able to say, okay, I'm going to put it down here at 86 or 85 or 75. It's too big of a risk. I'm going to watch price action. I'm going to watch what happens. If the bidders join us right here and sort of defend this zone on, say, a 1-minute chart, then we'll have a chance to succeed. If you don't get that trade, then you got a problem. If you get a big break, which can happen this time of day because there's not as much market depth as there typically is earlier in the day, what can happen to us? If it sweeps against us, we're going to get out. But we're going to let this thing sit for probably about a minute or so. You can see right here, here's your doji. I would have loved that doji to set up right on our support zone, and then we would have an opportunity to take this trade with a lot of confidence. But right now, we're just sort of milling around. There's no rhyme or reason. We know that we're up about 1.25%. I want to join that uptrend, and I'm more than happy to be aggressive to do it, but the market does have to come our way. We can't just sit here and say, well, I'm going to buy it or not. We did that yesterday with gold, remember? And it was terrible. It was a terrible trade location. Good idea, proper read, horrible trade location. So it was absolutely terrible. Let me see Clive. Good to see you, Clive. Lebo Gang, happy Friday, Shane, and happy Friday to everyone in the chat room. Absolutely, guys. It's sort of been a challenging week in a lot of ways, but this is not the day that you lose your ranch. Let me see right here. All right, Bobby Bob's got a question. Let me see if I can get it. Hi, Shane. I'm facing a challenge when trading using the EMA in the market. When price retraces, I often get stopped out. How can I approach this issue and improve my strategy on trading a market? Well, it's sort of what I always say about your trade location. If you're doing, if you're working with an EMA crossover, something like that, your trade location's sort of going to be what it is, meaning you're going to get into the market where the system tells you to, where the RSI is and where you get the crossover. Now, what I always like to say, and it really goes back to our example here, a lot of traders do this. Okay, they'll place this trade so they would take the sell, somewhere right down in there. And they'll either look to get out when that crosses back over, or they'll bring in a real tight stop loss somewhere in there and get knocked out of the trade. I'm always a fan of letting these types of trades, these crossover trades, I like to let them work. I like to let them play, and the reason why is you're trying to get in on a big move. You're trying to get in on a trend. And oftentimes what happens is, and it's no fault of our own, it's just you get into the trade and inevitably it retraces. I would say almost, I hate to say things like this because everybody's, what percent of the time does this happen? I can almost tell you that more times than not, when you get into these trades, price rotates back up to the moving averages almost religiously. So there's a couple of things that you can do to mitigate that. Number one, you can wait. So our sell signal would have been on this bar's close, okay? You can wait. Wait for the big pullback, then sell. Now that begs the question, well, Shane, I mean, if we do that, are we going to miss a lot of moves? Yeah, you will. You'll miss a lot of these moves like this where you get the big runner right away. But is it a better way to trade? It's a cheaper way to trade. You can definitely mitigate your risk by just trying to get a better trade location, meaning instead of selling down here, you sell up here when you get a touch, when the price comes back and touches your moving averages. You can do that. I'm actually thinking of building a video like that sort of enhances the 9 EMA with Fibonacci's. I think that's a great way to trade pullbacks. You can do that. The other thing that I would recommend is if you're going to be trying to get this 518 or the 920 or really whatever you're using, and you're moving your stop loss and you're trying to play it really tight, if you're on short time frames, it doesn't really work. And the reason why it doesn't work is because price action gets choppy, even though our broader direction will stay the same. So right here, you can see we sort of nailed the sell. It was a pretty darn good sell, but this was not an easy road, especially on a 1 minute chart. I mean, look at this. This is tough stuff. So, you can wait for pullbacks to sell or buy. You can just sort of dial in your risk according to that previous swing high. I recommend that. But I think that the best thing to do is just to manage your risk from the beginning. Remember, these, we talk about scalping, but on a 1 minute chart, a 5/8-13, then we're starting to say, okay, how many points do I need to take off the board? How much do I risk? How much should I risk on a given trade? I'm a big believer in the 1 to 3% trade parameters. I think if you're betting, or if your size is more than 3% of your account on one of these trades, I'll let you go up to 5 or 10% if you want. But I'm telling you, man, if you miss 2 or 3 trades in a row, going with 10% of your account, I mean, the damage is almost irreparable. You go down 30% in a short period of time, and more than likely you're never going to get it back. Mark Corp, I'd like to see that video. Yeah, I think we're going to build one of those. I think we're going to build a separate 5/8-13 video as well. There's been a lot of demand for this, so I'm more than happy to put some stuff out there. But you gotta really understand how you're going to manage your risk and be aggressive with it. You don't necessarily want to let these things run into perpetuity, But the biggest thing you got to do is you got to be consistent with your execution. If you're going to cut them off or if you're going to put a trailing stop on, do it every time. You have to. So right here, do we have any trades at all setting up? Well, we got a 1 minute. We're in overbought territory, so we would be looking to sell potentially. It's not a bad way to do it. We'll see what happens. All right, let me see. Leba Gang. My question for you is, what are your thoughts on AI trading? AI trading is something else. It's taking the world over. A lot of people are big believers in AI. To be honest with you, I've used AI to program some of my indicators, some of the things that I use. I've used it. ChatGPT. It's actually relatively straightforward. We might make a video on that, taking ChatGPT and using that basic, logic that we, describe our systems with, just in plain terms, and plugging that into the ChatGPT and getting things coded for things like PineScript, things like C++, things like, NinjaScript. All those things can be done with AI. I think AI is going to be a real big deal, Lebo. The question is would you plug in an AI bot to trade for you? You could, and a lot of people are doing that. I don't think I'll ever do that. Just because I don't know that that's necessarily the best way to do it, just because things change so fast and the AI itself is changing fast. Will the AI ever drive the markets? Well, I mean, it's always going to be bringing in volume. You're always going to be trading with a lot of volume with AI because they're automated systems, but will it dominate? There still has to be people ponying up the money and making the trades. So I think that AI is going to be a big deal in pretty much every facet of our life. However, I don't necessarily believe it's going to run or rule the markets. I don't. All right, so right here, we're sort of getting into overbought territory. I would love to sell this if we do get that 5. 5's got to cross over the 8. You guys know the drill. 5 crosses over the 8, and price is firmly established beneath all 3 moving averages. And then you're just going to look at maybe putting your stop loss above that previous swing high, and that would be your sell on this 1 minute NASDAQ. Okay, everybody, I'm going to go ahead and sign off here. Looks like we just missed our entry. We were at 73.98, and this low just went right down to 74. You get that a lot when you're trading intraday time frames. You almost always see price go right up to your entry point and then miss it. That's what makes the trade special. Actually getting your price is probably one of the more difficult things you can do as a scalper or as an active trader. Arshad, good to see you, Arshad. All right, everybody, I'm going to go ahead and sign off. This is today is not. Listen, we're seeing some action, and there's going to be some trades. Feel free to trade it. I wouldn't really call this a true no donation Friday, just because we haven't done much this week as far as trading goes. But we'll have a trade idea out probably a little bit later today. My guess it'll be the natural gas trade, but we definitely want to be ready for next week. So if you were going to take a day off, take today off. Get ready, get some rest this weekend. We come back Monday. Monday, we're going to hit the ground running. There's going to be fresh YouTube videos out next week. There's also going to be a lot of trade ideas, and we're going to be live streaming. Check your stream schedule, and it should be dialed in and ready to go here in probably the next hour or so. All right, everybody. I want to thank you for joining me today. Always a pleasure. Have a fantastic weekend break. Trade the action well, and we'll talk soon. See you.